Tesla has pledged to bring forward the release of more affordable models of its electric vehicles, helping its stock recover some of the recent losses after reporting a 9% decline in first quarter revenues. Hello and welcome back to our channel. My name is Daniela, and in today's video we are going to be looking at Tesla. As I said, we've seen quarterly profits reported, but also some announcements from CEO Elon Musk. And that, of course, has helped the stock price recover. But before we get into it, please like this video, comment, subscribe. And of course, if you have any questions or suggestions, feel free to leave them in the comment section below. So as I was saying, Tesla has pledged to bring forward the launch of its more affordable models of its electrical vehicles, something that consumers had been asking for a while now. And that's helped the share price recover even after it reported a 9% drop in first quarter revenues. Now, it added that these models would include more affordable vehicles. They're expected to be priced at around $25,000 per vehicle. And Tesla shares did rise over 10% in after-hours trading on Tuesday after the announcement came out. Now, Chief Executive Elon Musk said in January that they were preparing to start production of this new model, dubbed the Model 2. But the stock actually fell back at the beginning of the year after a report from Reuters highlighted that the plans to produce these more affordable vehicles had been shelved. Now, we have seen a bit of a turbulent time for Tesla's share price recently. It comes in general around the electric vehicle motor. It's seen some turbulent times. We've seen lower demand, and that did push the share price of Tesla down 40% since the beginning of the year in an amalgamation of, as I said, softer demand. Also, we've seen Tesla announce plans to cut up to 10% of their workforce. And we've also seen slowing vehicle deliveries. We know that supply chain disruptions because of Houthi attacks on shipments in the Red Sea have affected their deliverables. But also, we saw a fire break out after a protest in Germany, and that also slowed their production. So it has been a turbulent start of the year for Tesla, and that has been reflected in the share price, as I was saying, down around 40% from the beginning of the year. Even more if we're looking at the highs that we saw back in July last year. Now, we've seen, as I said, slower demand as well. We've seen high competition coming from the electric vehicle industry from China, but also consumers have preferred hybrids than full electrical vehicles, and that has been reflected. And that has led to a discount on prices. So we've actually seen, if we're looking at the earnings that were released by Tesla on Tuesday, as I said, coming in below expectations, we've seen the underlying financial performance has been disappointing. First quarter revenues fell to $21.3 billion, down from $23.3 in the same quarter last year. And analysts were estimated 22.3. So a bigger drop than expected in those revenues. That is actually the first year-on-year quarterly drop since the start of 2020. Now, adjusted earnings per share did also come in below expectations, coming in at 45 cents, down from a year ago, but also below estimates of 52 cents per share. This is the sixth quarter of declining gross margins for the company. As I said, slower demand has led the company to discount the price for a lot of its popular models in order to get rid of a lot of unsold vehicle inventory, which has been building up. We're looking at gross margin, which is closely looked in the vehicle industry. It fell to 17.4%, down from a peak of 29.1% in the first quarter of 2022. So as I said, financials from Tesla coming in weaker than expected, but that announcement from Elon Musk to bring forward the production of a cheaper vehicle has clouded the outlook for now, at least in the short term. So let's take a look at the chart now to see how the share price is trading. Okay, so let's take a look at the Tesla share price here. We can have the daily chart. And we can see here the recovery that has started this week. The share price actually gapped lower at the open on Monday, but managed to regain its footing, pushing higher on the day. And yesterday on Tuesday, that's when we saw that strong after-hours trading. The share price is currently in the pre-market, so not open yet for the main session. It won't be for another 3 or 4 hours, but for now, it looks like the share price is going to open higher once again today on Wednesday, as I said, after that report from Elon Musk, which has actually clouded the worse than expected earnings report that we saw released this week as well. So far, the bullish momentum looks to be the case for this week. Technically, we were already a little bit oversold already after the drop that we saw last week. So it could be a bit of a technical reversal also helping that improving sentiment around those fundamentals. But there are a few things to watch out for in the chart. First of all, in the short term, we have a few descending trend lines here that could limit the upside if the bullish momentum were to accelerate even further. First of all, we do have this descending trend line here from the highs in February that's currently limiting that momentum just around that $168 mark. Even further than that, if we were to see that momentum capitalize, and of course, this would need a lot more dedication from buyers, and it would probably take a few months to do so. But we could eventually jump into or run into further resistance just above that $2,000 mark. If it were to build even further and we were to extend this descending trend line here from the highs in July 2023. Now, let's take a look at the weekly chart, because I think there's also a very important trend line to watch out for. And this is this ascending trend line here from the lows back in 2020. So this is connecting the lows from 2020, 2023, which is this one here, and could potentially see some support come in for short-term traders if the momentum were to reverse lower once again. Currently standing at just around that $135 mark. So we could see further support come in, as I said, if we were to see further selling pressure. In terms of the immediate, we've currently reversed about 78.6% of the rally that we saw between January 2023 and July 2023. So currently 78.6% of that has been undone. And what's interesting is a lot of the Fibonacci levels have been of importance in this bearish move that we've seen since those highs in July. So we've seen interest attract or more volatility or interest attracted around these Fibonacci levels, this 23, also the 38 back here in November. We've seen it around the 50%, 61 also offering some support earlier this month and earlier on in the year. So I wouldn't be surprised if the 78.6% Fibonacci also attracts more attention in the present. We could see potentially a little bit of sideways consolidation. Even if we see a rally from here, we could see price return back to this level over the coming weeks. And as I said, this ascending trend line here also reinforcing that support. So it looks like we could be in the, we could see a reversal higher, or I guess a change in momentum, a longer term sentiment happening at these current levels, but it may take a few weeks to get there. And that's where this 78.6 Fibonacci really comes into play for buyers looking for support. That is it for today's analysis on Tesla. Thank you so much for watching, and don't forget to subscribe to our channel.